There's only one word to describe what happened today with the stock market and with gold and silver, and that word is fear. We're going to discuss what happened and why we should still be happy about what gold and silver did today as we explore. The stock market got hit hard. It got pummeled big time. In fact, the Nasdaq has suffered its worst days since 2022 as recession fears erupt, according to CNBC. This is a big deal, folks. The Dow Jones Industrial Average fell over 1,000 points earlier in the day, but it has since recovered somewhat. It is still down about 900 points. A 3-week market sell-off intensified on Monday, with investors worried that tariff policy uncertainty would tip the economy into a recession, something that President Donald Trump did not rule out over the weekend in an interview. But let's see what's going on with the markets, because indeed they are alive and kicking, and everything is down in the red, with silver taking it on the chin, much more so than gold, which is to be expected. But gold is now trading under $2,900 an ounce moments before the markets close here. Silver is down 46 cents. That's a 1.42% drop. Still, it is above $32 an ounce, but it did get below $32 earlier in the day. Platinum and palladium also got hit, but rhodium, believe it or not, has went up another 5% today to $6,400 an ounce. That's up $300 a day, so it's bucking the trend, that's for sure. But yes, indeed, what a move we're seeing in the precious metal markets today because of what's going on in the stock market. And of course, if you're relatively new to the markets, you might think that it should be the opposite. Gold and silver should do well in a day like today when the markets go down. But that is not the case. I'll get into the reason why that happened here in a moment. First, I want to remind you about channel sponsor Summit Metals. This is a good time if you are in the market, and only if you are in the market, to buy, to take advantage of the dips. And check out summitmetals.com. They have very competitive pricing, great service, and fast shipping. In fact, I just got notified that my latest order shipped. So what's going on here today? Well, the S&P shed 2.7%, touching its lowest level since September, at one point in closing, but to 5,614.56. The S&P is about 8.7% off from its all-time high, and this is all due to fear, what's going on in the market, that we could see based off of what the Atlanta Fed has said with that massive drop in GDP growth for this quarter. If we get another report like that for the next quarter, well, we are in a technical recession. But you have to think about what's happening here and this nervousness in the markets. And people are running away. They're running away right now from gold and silver, but not as much as you may think. In fact, I'm actually surprised they didn't drop much more than they have. But in times like these, people run to the safety of, yes, indeed, cold hard cash or core accounts that are made up of dollars. But that is really what people are doing right now. They're looking for safety. And the most liquid asset that they can find is the dollar, even though it's still under inflationary pressure. In fact, that's one of the reasons I think why we're not seeing as much of a sell-off as I had expected, is because the dollar is still damaged from inflation. Now, keep in mind, inflation is something that has been occurring year after year by design by the Federal Reserve at least 2%, and inflation is caused by two things. Government spending, which propels the Federal Reserve to order more printing of dollars. Of course, most of the dollars that are created that add to the M2 money supply are really not printed at all. They are merely digitized. If they had to print them, it would cost, whatever it would be to print this. I think this has cost like 14 or 15 cents to print one of these dollar bills. But notwithstanding, you can't print gold and silver. And so I think these numbers are going to turn around, and maybe not within the next couple of days. It just depends on what happens with the market. But I think we're going to see perhaps them recover fairly soon. The dollar index is up today, but it is not up by a whole lot. In fact, it's up 0.32% to 103.99 right now, practically 104. And that is another thing that I think is contributing to gold and silver prices falling. Now, this activity is also on the backdrop of other things that are having an effect on gold and silver prices, as the dollar is having an effect here. As we see gold trading at a softer tone today, below the $2,900 mark during American trading hours, according to FX Street here. And this is because the dollar found near-term demand despite a risk-averse environment. Global stock market trade in the red is beginning of the week, maintaining the focus on the United States President Donald Trump's trade war. The absence of relevant macroeconomic news fueled sentiment related to trading, but of course now we know that the recession fears are really what is driving this. But silver prices as well are having an impact, and mainly due to softer China's economic data. And that makes a lot more sense why it's falling even more, although we do see that typically happen. When gold falls, silver tends to fall a little bit more. Silver prices extends its losing streak now for the third consecutive session. During Asian hours, the prices of silver depreciate as softer economic data from China fuel demand concerns. That's the thing that a lot of people don't understand, or a lot of people they fail to grasp, essentially, that if demand is the big driver, if that demand softens, it's going to have an impact on the price. And we're seeing that happen right now with silver, and this is my argument against silver price suppression. Perceived demand based off of economic data is one of the big drivers, especially considering silver's industrial use. And so people have to understand that to make sense of what's going on with these markets. China's producer price index dropped 2.2% year over year, following a 2.3% decline in the previous 2 months. This represents the slowest contraction since August of 2024, but highlights persistent deflationary pressures on China's industrial sector, where silver demand is significant. China is a big deal. It's a big mover. Moreover, China's consumer price index fell 0.7% year over year in February, exceeding market expectations of a 0.5% decline and reversing the previous month's 0.5% increase. This marks the first instance of consumer deflation since January of 2024, but downside risks for safe haven metal silver appear limited as trade tensions escalate. Now remember, there's a lot of silver that's been imported into the United States. Could that silver be activated for industrial demand here in the U.S.? And which means that if we have more economic activity here, which includes manufacturing and more jobs because of people wanting to avoid tariffs, foreign companies or domestic companies that produce overseas and moving manufacturing back in the United States, that silver could be activated for such a time as this. And that can actually be very, very good and could cause the price of silver to go back up again. Now, the Trump's 25% tariff on Canadian and Mexican imports took effect, but once a 1 month exemption was introduced for goods meeting North American Trade Pact standards, offering some temporary relief. Now, safe haven demand for silver could strengthen amid rising concerns over the U.S. economy. San Francisco Fed President Mary Daly stated late Sunday that growing uncertainty among businesses could weigh on economic demand. Daly noted that business leaders in her district are increasingly worried about economic conditions and policy, which research suggests may dampen overall demand. So we'll see. A lot of different factors that come into play there, but it really does boil down to perceived demand and actual demand when it's all said and done. And getting reports of actual demand for silver by the time it has an impact on the price, well, it's too late in many cases, assessing and that data. It's a perception of the demand, really, that has the biggest impact, I think, in terms of price until that reality kicks in, based off of research by several institutions, including Metals Focus, and other CPM Group and others that do the hard work and trying to figure out where a lot of the silver is coming from. So we'll see how this plays out. Nonetheless, there it is. There's your market report. Stock market got pummeled hard today. Gold and silver suffer as a wake of it, but tomorrow's a new day. But the fundamentals for silver and gold have not changed. That's for sure. We continue to hold them as wealth preservation devices outside of the current system from which we find ourselves apart. This is sound money. This is unsound money. It's a losing proposition. We hold them. We need them for sure. But we know that the ultimate true store of wealth is in gold and silver. So there you have it. I like to bring you the latest news in the world of precious metals, so I hope you will consider pressing that like button down below if you enjoy the content that I provide here, and subscribing to the channel as well, trying to reach 100,000 subscribers by the end of the year. And with that, I'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.